very good afternoon to you and welcome to today's edition of Joy Business Masterclass. Masterclass is powered by Joy Business, and Masterclass comes your way every Wednesday at 1:30 p.m. runs all the way through to 2:15 p.m. here on your superstation Joy 99.7. My name, as always, is Yaw Barnafo, and I'm glad to be your host for today's edition of Joy Business Masterclass. In our last conversation with Dr. Kaylan, we talked about taxation, and we talked about branding, I beg your pardon. And in that conversation, he talked about the need for branding and the importance of branding in our businesses. Today, we're moving the conversation to another area. We'll be looking at taxation of foreign income. Taxation of foreign income. To have that conversation with us, we have another renowned Ghanaian. He has one of those CVs which I was talking to him earlier on before we came on the show, and I said, when I grow up, I want to be like him. I just try and read portions of it. So he's a barrister and a solicitor of the Supreme Court of Ghana. He's a chartered tax practitioner. He's an international tax advisor. He's a chartered accountant. He's a transfer pricing specialist with extensive knowledge and experience in tax law and fiscal policy. He's also a qualified insolvency practitioner, and he specializes in international taxation, transfer pricing, energy resources and mineral taxation, and also commercial and company law. His CV goes on and on. He served as a director of tax at EM Tax Advisors and is also leading a team of tax advisors for the firm. He's also an adjunct lecturer in the law of taxation at the law faculty of the Ghana Institute of Management and Public Administration, GIMPA. He's a guest lecturer at the University of Ghana School of Law, and he lectures on tax policy colloquium. He's also a lecturer at the Ghana Tax College and EM Tax Training School. He has trained over 1,000 tax professionals, including senior employees of the Ghana Revenue Authority, of banks, of insurance companies, of oil and gas companies, and of international accounting and auditing firms such as PwC, EY, KPMG, and Deloitte. He's also an author, having written the best-selling book on international tax titled Abridged Principles of International Taxation, and several articles on international taxation in print media and journals. So you now understand why I said he has one of those CVs that when I grow up I want to be like. My guest for this afternoon is the person of Fred Kwashie Awuttey, Esquire. Fred,
yeah,
maybe I should move back small. I'm sitting too close to you.
I see.
But you have an impressive CV.
Thank you.
Wow. And I'm happy that you're Ghanaian as well.
Sure.
Because it gives me, a lot of encouragement that all the young ones who are coming up, they can do it. Because we want them to be better than us, isn't it? Exactly. That's what this whole thing is about. Exactly. We become the best we can, best versions of ourselves, and the ones who come after us become even better by standing on our shoulders. Exactly. I'm excited to have you. I'm going to try and keep quiet. I've been accused that I can't keep quiet. I'll try and keep quiet and learn, because we all need to learn about tax. I mean, one of the things that I learned earlier on when we had other people on the show talking about tax was that some of the wealthiest people and the wealthiest firms are those who pay attention to their taxes.
You're correct.
But it's also one of the areas where people are afraid of. They don't want to talk about it. They don't get it. I was telling you earlier, people don't like it when money is taken from them. What is the government using the money for? But we also know that tax is backed by law. Today, you're going to be talking to us about taxation of foreign income. There are Ghanaians here who are working. I won't say thanks to COVID, because COVID leaves a bitter taste in our mouth. Yeah. However, the onset of COVID started a certain trend, or should I say catalyzed it here in this part of the world, where people began to explore online opportunities for business. There are people here today who are employed outside of this country. There are people who have more than one job. The last I heard, if you have more than one job, the tax authorities need to know, because they have to tax you for the second job. People are earning foreign income and they are not getting taxed.
Yes, that's correct.
But you're going to educate us today on taxation of foreign income. Exactly. And please don't turn your radio off. I know you are thinking you want to now, small money I'm getting, you want to tax it. But it's good to have the information so that we can all become better for it. You're a business, you're an entrepreneur, you're a company, you're doing business in Ghana. You're supplying expertise, consultancy advice, you're supplying goods. Whatever it is you're doing, once you're earning foreign income, it's good to be able to understand what the law says about your tax position. And Fred will do us those honors today. So Fred, you're welcome to the show. We're excited to have you. I was sharing this with you earlier that I tried to go online to find a few comments on tax. Unfortunately, the ones I found were all not very charitable. But I'll just share this one from Albert Einstein. Albert says that the hardest thing in this world to understand is income tax. when I said it, you looked at me funny because you are teaching in 3 or 4 universities. You have 3 or 4 degrees in tax. Surely you understand income tax. But I suppose Albert was speaking from the perspective of people who don't know tax.
Exactly.
And the hardest thing to understand is income tax.
Yeah.
Why do I work so hard and I pay 40% basic tax in some countries? In Ghana, depending on how much you're earning, your tax bracket changes and all of that. Tax avoidance, is it tax evasion? People don't declare. All of those things, you're going to talk to us about it. But today we focus on foreign income.
That's great.
Please talk to us.
Thank you very much. I think you've done quite very well. And I'm just thinking of the way the words and get charitable about me. And thank you very much. So just like you've said, we'll be looking at taxation of foreign income. And we will be looking at the legal basis of maybe how Ghana will say that I want to tax income that is earned from UK, from South Africa, or whichever place outside the country. And then we look at the legal basis on that. What is the legal framework within the Ghanaian tax law? And that gave the power or authority or the jurisdiction of Ghana Revenue Authority to tax certain income. So we'll be looking at those issues. And then we'll also be looking at who is resident, who is also non-resident person in Ghana, because basically resident persons are responsible for payment of taxes. Then we'll delve into double taxation, because once Ghana government is going to tax such an income, foreign government will also tax it. That will result to a double taxation. Then how do we minimize that exposure, just like you've said?
The question that has even come to my mind, which I will ask later, is if I'm a dual citizen of 2 countries, and I go and come, and let's say my family and my children are in a certain place because of the children have to go to school, and I'm also here doing business, am I susceptible to tax in both places? I'm sure we'll get the answer.
We'll get an answer. Certainly. Also, we'll get an answer. It's part of the discussion as we move around. Now, if you say taxation of foreign income, we first have to look at what is the legal framework within which Ghana would tax the foreign income, or what is the legal position of the law. Now, taxation is law and is backed by law. Where there is no law, then there is no taxation. So once you mention the thing as tax, then it's law. So the law must make provision for it. So if you look at the Income Tax Act specifically, which is used to tax income, it has made mention of 2 jurisdictions. So before the income is taxed, government of Ghana or Ghana Revenue Authority should have what we call jurisdiction. Otherwise, the power to tax such an income. So what are these types of powers we have? If you look at the law classifies these kind of jurisdictions or the right to tax the income into 2. So
let me just chip this in. Fred has obliged us a couple of slides, and we're streaming live on Facebook. If you're just joining us, please go to our Facebook page by all means and follow the slides so that understanding can be clearer. Thank you very much. Fred, please continue.
Great. So there are 2 systems or 2 rights that Ghana Revenue Authority has to tax on income. So one we call it resident jurisdiction, and then source jurisdiction.
Resident jurisdiction
and source jurisdiction. So these are the 2 main jurisdictions that every country will have to tax on income. And if your income is going to be taxed, it must be taxed either in the framework of source or in the framework of residence. So when we say resident, what really do we mean? Resident system of tax. In this case, we're looking at a situation whereby if a person is resident in Ghana, once the law of Ghana say that you are resident in Ghana, then effectively government of Ghana or Ghana Revenue Authority will have the right to tax both your local income that you derive from Ghana and any other income you derive outside the country.
So for the avoidance of doubts, residence in Ghana will mean or means legally resident in this country.
Yeah, legally resident within the context of the Income Tax Act.
Right.
You see, you may be resident within the context of, let's say, immigration and others, but what we are talking about here is within the Income Tax Act. So the Income Tax Act has its own provision framework on what really constitutes for resident.
I would like when we get interactive, if there's anyone listening who knows the immigration service, or if there's anyone at the immigration service, I would like you to get in touch with us when we get interactive so that you can share some perspective on what it means for a person to be resident in the country of Ghana, just for perspective.
So we'll look at it from the perspective of taxation.
I just threw an invitation out to the Ghana Immigration Service, but please go on.
That's great. That's great. So now the rule is that if you're a resident in Ghana, your foreign income and your local will be subject to tax in Ghana.
Your foreign income and your local income.
The local income you earn in Ghana. So for example, if you earn income, let's say 200,000 from UK, and you also earn some consultancy fee from Ghana, which may be 10,000. So the money you earn in UK will have to be taxed in Ghana to the extent that you are resident. So we'll go to the place where...
That's a serious thing you just said. But please go on.
We'll look at the situation where we'll find out who resident is. I mean, who is actually resident in Ghana. Because if you're not resident, this rule doesn't apply. So in this case, if you look at the relevant sections of the Income Tax Act, it gives the mandate to the Commissioner General to tax the income of a foreign of a resident person. Particularly if you go to section 111, subsection 1, it talks about that. Now, the question is, who now is resident? Because if you're not resident, your foreign income and your local income earned will not be subject to tax in Ghana. So who is resident? So then we also have to come back to the law. What does the law say, particularly the Income Tax Act? What does it say about resident? And the law classified resident into 4 categories. So we have resident individual, we have resident partnership, we have resident company, then we have resident trust. Now, each of these categories have their own definitions or application as to who actually is resident in Ghana. Now, when it comes to individual, remember, we said we put the rule that if you are resident in Ghana, that is where the income you earn from a foreign country will be subject to tax in Ghana. So we wanted to know who then is resident in Ghana. Now, who is resident in Ghana? So let's look at individual. So as an individual like me and you, the law says that if you are citizens of Ghana, you will be resident in Ghana. Unless you have a permanent home outside the country, where you live in that home for the whole of the year.
For the whole of the year.
So that means that if you are citizens of Ghana, you automatically become resident unless you have a permanent home available to you outside the country. And you live, the word is that you have to live in that home for the whole year. So let's say, for example, I am a citizen of Ghana. I go to UK and then I go to do some business, but I don't have any home there. I mean, when we say home, the law also defines what constitutes home. So you have to look at it.
Paid for and registered in your name as being owned by you.
As being owned by you, but not necessarily owned by you, to the extent that you control the place. You have an unaffected right to use the place always. That nobody can prevent you from using that place. That you can go there and call a home and you can relax and do your own thing. Then that constitutes your home. So you could rent it, you could buy it, you could control, you can even purchase with a friend. And so long as you have an unaffected right to use that place, then that constitutes a home. So that is how the case laws will look at it. Do you get it?
Right.
So in Ghana, once you're a citizen, unless you are outside the country and stay outside the country for the whole year, and then live in that home. Now, if I have a home in South Africa, but I go to, let's say, America, USA, and stay there, I don't have a home there, I will continue to be resident in Ghana. That is the position of the law.
Even if it's for a whole year?
Yeah, even for the whole year. Because we cannot ascertain that you have a home outside the country. But the question is that how will we know?
Exactly.
How do we determine? Yes. So how do we determine that? That becomes a challenge.
Right.
That may be a challenge for Ghana Revenue Authority. However, there are exchange of information between Ghana Government Authority, Ghana Revenue Authority, and other jurisdictions that we can use to determine whether you have a home or you don't have a home there.
But otherwise, it's also expected of good citizens to inform the GRA.
Yeah, because our tax law is self-compliant. So on that basis, it is better for you. I mean, any tax compliance person have to.
I can imagine a few of my friends who just laughed at what I said.
But let me tell you one interesting thing. No, so what this also means that if you're citizens of Ghana and you live outside the country for maybe 5 years, 10 years, and then there's a funeral in Ghana, you came back for 1 day and you left, then the law says that for the year that you came, you are resident. And
Say
yes,
that again.
that's how the law says. The definition I gave you now
Yes.
is telling us that assuming you live in UK for the past 10 years.
So you're a citizen of Ghana.
And you're citizens of Ghana. You are resident for the whole of the year.
Computes the value of tax you should pay.
Oh, it depends. It's very easy.
There's a matrix.
Yes, the law makes specific provision on how
right.
this
There's a
income
method.
can be taxed out. So the first thing is to determine whether you are a resident. Whether Ghana government or Ghana Revenue Authority have the jurisdiction to tax your income first. Because if you are not resident, Ghana government or Ghana Revenue Authority has no jurisdiction to tax your income if the income is earned outside Ghana, or the income has no source in Ghana. We'll come to that aspect later. Do you get it? So once you determine that you're a resident, then your worldwide income will be taxed in Ghana. So that is how the law make provision for it. Now, let's also look at, you are a citizen of Ghana, but you temporarily leave the country, and for maybe for a period of not more than 365 days, continuous in a year. You continue to be resident in Ghana. That means that if you leave the country for 364 days, on Christmas Day you come, you are resident. So that is how the law look at it as an individual who is citizen. Now, if you are not a citizen of Ghana, but you are a non-citizen of Ghana, the law is that if you spend 183 days in aggregate or more in Ghana within any 12 months in a year of assessment, then you are resident. What that means is that if you are, let's say, a South African citizen and you came to Ghana to do some work here and you spend about 103 days, either beginning this year or ending, that is 6 months, ending the following year, you are resident. And the implication here is that your income, both the local income you earn in Ghana and the foreign income you earn in South Africa, will be taxed in Ghana.
Now you can just cross the border and come back.
But the rule is that then you must cross the border and spend 1 day.
You go to Togo and spend 1 night
and then come back. Well, that
Please, I didn't say that.
Now, so that is how it works. So what that also means is that if you are a non-national and you come to Ghana, let's say in the year 2023, you spend 3 months. Then 3 months from, let's say, from October to December, and then you came back somewhere in April and you spend another 3 months. We count the 3 months add it to the previous year, then it add up to 6 years. So long as the 6 months is within the 12th year, not the same year.
The 12-month period.
The 12 months period.
Right.
Either beginning in 1 year or ending in another year. Then you will be deemed to be resident in Ghana.
Continuous 12-month period.
Not continuous, in aggregate.
In aggregate.
Yes.
Right.
In aggregate. Then you continue to be resident in Ghana. And for that matter, your worldwide income will be assessed and be taxed in Ghana. But the taxation will begin from where you came to Ghana for the first time, not from January. Right. So that's the distinction you have to look at. Then another leg of an individual who is resident is maybe your government official who is posted outside the country. These public officers or maybe ambassadors and or high commissioners who we normally post outside the country. Remember, we said that when you're a citizen, we spend more than 365 days or the whole year outside the country, you're not resident. The Ghana has no jurisdiction. But what of ambassadors who we post outside and they decide not to come to Ghana for the whole year? So that means Ghana is not going to tax their income. So the law makes provisions that to the extent that you are a public official posted outside the country, you will continue to be resident in Ghana unless you cease to be a public official.
I think that is straightforward.
Yeah, that one is straightforward. So these are when you talk about individual. So these individual have these 4 legs of definitions. Then we come to a company as resident. Remember, the taxation covers a company and also an individual. So we are looking at taxation of the foreign income of a company and then an individual. So let's look at the company.
Right.
Now, here the company, there are 2 factors we normally look at. Whether the company is incorporated in the country or the affairs of the company is managed and controlled in the country. Now, there are instances where person said, okay, control here means the legal ownership. No. You're looking at where the affairs of the companies are managed and then controlled in the country. Then that company is resident. So, for example, a company could be incorporated in South Africa. They come to hold some board meetings in Ghana because they realize Ghana is a good destination place, and then they take a decision that affects the company. So the law says that company will be resident in Ghana. And any income that is earned and which is outside the country and connected to the company will be subject to tax in Ghana. So that does it. And how do we determine the affairs of the company? Sometimes we look at the law that governs the operation of the company. So if the law that governs the operation of the company is Ghanaian law, then we can say that the affairs of the company is being managed from the country. Or the board of directors hold meetings here and take a decision which affect the overall direction of the company. Then in that case, we will say that the company is resident in Ghana.
So that dealing with the company and tax is not as straightforward as it is for the individual. It's a bit more complicated.
I must be honest. The individual is a bit more complicated.
Than the company?
Yeah, than the company. Because company is very straightforward. We can easily track their move. But if you look at an individual, it's very difficult to track. For example, somebody just moved to Togo. You don't need visa to go to Togo. So that makes it a bit difficult to track. And then the company will always file their returns. So it's very easy to access and the company than individual. So that makes
they're monitored by law as well, by governments.
Exactly. So that deal with the company.
The companies.
Okay. Now, remember, I said there are 4 classifications of residents. So we talk about individual, which we say that when you are citizens of the country and then your permanent home is outside the country, you spend a continuous days, or you spend the whole year outside the country. Then we talk about the public officials. Then we talk about non-nationals who spend 183 days in 12 months in the country. So that is one leg. The second leg is the company which we talk about.
That's correct.
Then the other one is partnership. So how can a partnership be resident in Ghana? So that one is very straightforward. The rule is that a partnership is resident in Ghana when any of the partners reside in Ghana.
Okay.
Did you get where any of the partners reside in Ghana? But the question is that what is the meaning of reside?
We can go back to your definition of if you're in the country for.
No, that is resident. That is resident. Reside is a verb. The other one is a noun. Do you get it? So how long can a person reside? That becomes a challenge within the law, and maybe we have to look at it and explore it further.
When you talk about verb and noun the same way, that's it.
Yes, because
it's going to interpretation of law.
It's going to interpretation of law. So you have to look at what really constitutes resident. Reside in the law. If you look at the English dictionary, especially the Oxford dictionary, it says that reside means to stay in a place for a very long period. And the question is how long is long? That's another issue. So we have a bit of challenge when it comes to partnership. But that is also clear in certain aspect of the law which Jerry can use to tax partnership income or to assess in the partnership as resident. The other leg, which is the final leg for resident, is trust. So the question is how can a trust be resident in Ghana? So as a trust, the law is that once the trust is registered in the country, then is registered in the country is resident. Or any of the trustee is resident in the country. Remember, when we are talking about partnership, we say reside. But when it comes to trust, it's about resident. So if any of the trustee is resident in the country, then that trust is resident. Or any manager of the trust is resident in the country, or the affairs of the trust are managed from the country. Then we have the trust being resident in the country.
Right.
So, as we have explained earlier, the issue is that we are looking at taxation of a resident person. That is the worldwide system of tax. So, which we say that if you are resident in Ghana, your local income and your foreign income will be taxed in Ghana. But who is resident? That's what we looked at earlier. All right. Then let's look at the second leg of the jurisdiction to tax. That is, we are going to look at what of if the person is not resident in Ghana. He's not from Ghana, but earns income from Ghana. That is also foreign income. So you live outside the country, and you're not even in Ghana, but you derive income from Ghana. That is the foreign income of that person. How will that income to be taxed? So the rule is this. Here, the rule is that if a person is not resident, his income, i.e. employment income, business income, and investment income shall be taxed in Ghana to the extent that the income has a source in the country.
Right.
So if you are a non-resident, meaning that the law did not consider you to be resident. So if you are non-resident,
your business dealings
are from
you can
Ghana.
trace the source
in Ghana.
In Ghana. then you are liable to pay tax in Ghana.
You are considered to be resident. That's the first before we can assess your income.
Right.
So you will be liable to pay tax eventually.
By virtue of source of business.
By virtue of source of the income. So it also means that if you earn any other income outside Ghana, that will not be taxed. So you get a distinction.
Yes.
A non-resident will only be taxed within the jurisdiction of the Ghana, of the country, based on the income that is derived from the country. Now, if you derive the income from the country, which has a source, then that income will be taxed by Ghana Revenue Authority. But the next question is, what is the meaning of a source? The law says that if you derive the income to the extent that the income has a source in the country, then that income will be taxed. So what is source? Does that mean that we can use our own money and say that the income is from Ghana, so let's tax it? No, it doesn't work that way. The law then have to define what constitutes a source. Now the law says that when the income is derived from or earned in Ghana, then the income has a source. Then the next question is that what is the meaning of derive and earn from Ghana? so
this thing can be stretched to absurdity.
This is what the legal lawyers will be looking at.
Yeah.
I mean, remember the MTN case, recent MTN versus it's Cancom Ghana Limited versus Ghana Revenue Authority, where MTN has won that case. I mean, it was based on this situation. How can we say that the income has a source in the country, where there's a transmission of information kind of things through cable kind of things? So that is the case before the court. So we'll come there.
I'm smiling because of, at first we talk about derived. Then we're talking about source. Then
Yes.
it's interesting.
Yeah, so that is why somebody will tell you that taxation is quite complex. Anyway, because it's legal issues.
Yes.
So you have to use the legal mind to look at it. And because if the law says tax it, but the law does not give you umbrella hand to go and tax it.
That's true.
It must be done within the tax law. And that is what we're looking at. Did you get? So then what is derived from or earned in Ghana? To get this, the law went further to talk about various income that are deemed to have a source in Ghana. For example, let's take dividends. Let's say a non-resident person who has an income from Ghana in form of dividend. The law is that if once a resident person pays that dividends, then the income has a source in Ghana. Ghana Revenue will tax it. So a dividend could be declared somewhere in South Africa by a subsidiary in Ghana is the one paying. But the rule is that once the income is paid, the law defines paid to be paid or payable. So on the basis of that, once it is paid, then Ghana Revenue Authority will have the jurisdiction to tax such an income. But let me tell you one interesting thing for interest. What if an interest is paid by a company in Ghana? How can we say that interest has a source in the country? We'll come to employment. Then you look at it.
I was going to ask that. Then it means that the decision for multinationals for the payment of dividends for its investors within any local area has to be carefully thought through.
Exactly.
Because it has tax implications.
I must be honest with you. Every single decision that a business takes has its tax consequences. There is no decision you will take that does not have a tax implication. So you have to think through. And sometimes it's not because you've done something wrong within a tax landscape. Just because of the way you classify your transaction can also lead you to pay unnecessary tax. And I would put it in quote. Do you get it? Sometimes that is what happens. So depend on how you recognize your transactions, how you record the transaction. The law says that record it this way. Then because of ignorance of the law, you went to record it another way. The law will say that it is outside, so I'm taxing it.
Of course.
Do you get it? So that is why every decision you take, you have to think through and what are the tax implications on that before you go ahead and take. And you see most companies, especially the local ones, they just take a decision and then we move on. Do you get it?
Interesting information. If you just tuned in, this is Masterclass here on your superstation Joy 99.7. We're going to get interactive right now, but before that, we take a quick message from our sponsors. When we come back, we get interactive.
It's the 3i Africa Summit, where innovation, impact, and investment converge, where technology drives transformation. From the 13th to the 15th of May 2024, heads of state, central bank governors, thought leaders, innovators, investors, academics, and entrepreneurs will converge to unleash Africa's full potential. Discover the power of digital assets, explore the state of digital growth in Africa, and unveil lessons from Africa's central bank digital currency experiments. Engage in discussions on diversity in the creative arts and tech, financing Africa's SMEs and bridging the digital gender gap. Network with investors, pitch your ideas, and access funding at the 3i Africa Deal Room and Pitchfest. Join us at the Accra International Conference Center as we ignite a fintech revolution for Africa's financial future. Visit 3iafrica.com to register now.
Your favorite on-air business development program, Joy Business Masterclass, is in session, and you can interact with us on Facebook via the Joy 99.7 FM or Joy Business pages. If you tweet, the handle is at Joy 997 FM or at Joy Business GH. Don't forget to hashtag JB Masterclass. You can also call us on 0302 216541 or send your questions and contributions through to the WhatsApp number 0551 111997, and our facilitators will address your concerns. Attention everyone, class is in progress.
Welcome back. If you just tuned in, this is Masterclass, and we're here in the studio with Fred Kwashie Awuttey, who's a chartered tax practitioner and a lecturer and also a lawyer. Numbers to call 0302 216 541. That's 0302 216 541. You can also send us your comments on 055 1111997. If you're driving, please do not text while you drive, because we definitely want you to arrive alive. But otherwise, pick up that phone, give us a call 0302 216 541. That's 0302 216 541. Or you can send us your comments on 055 1111997. We are trying to understand the business of taxation for ourselves as individuals and also for our businesses. When was the last time you checked your TIN number? Are you filing your taxes properly? Are you evading tax? You're earning so much money and you're happy and you're walking around as a wealthy man or as a rich man. The day GRA will come for you, you will see that you have to do things properly. Let's all learn and become better for our businesses also. We oftentimes complain that tax kills our businesses. Phone lines are open. Numbers to call 0302 216 541. Send us your comments on 055 1111997. I have a question on social media already. This one is from Essie. Essie says, good afternoon. I'm a consultant resident in Ghana and a citizen. My fee is quoted in dollars, but paid in cedi equivalent. I am responsible for paying my own taxes. How do I go about it? I sometimes do consultancies abroad and get paid in dollars. Do I pay tax on that as well? NB, I'm driving, so I wanted to post my question early, just in case it was discussed. Essie, we're reading your question now, and Fred is going to oblige us with the answer. So Fred, he's a citizen, and he also does his fees quoted in dollars, but it's paid in cedis. How does he go about his tax? Sometimes he also does jobs abroad and also gets paid in dollars. How does he handle his sole tax?
I think we've talked a little bit about that earlier. Now, if you receive income in dollars, or maybe in Ghana equivalent, our tax law make provision that you pay tax in Ghana cedis. However, based on the permission you receive from Ghana Revenue Authority, the Commissioner General, you can then file your returns or do everything in a foreign currency. However,
even though he receives it in cedi?
No, once it is translated in cedi, you just file your return, because you file returns, you pay tax in the local cedi.
It's local cedi.
But however, if your transactions are fully foreign, like this multinational company, they get permission from Ghana Revenue Authority, from the Commissioner General, and then code that. File their returns in a local currency, and foreign currency. Now, he said that he sometimes takes earn income.
He does consultancies and earn
so we have earlier said that to the extent that you are a citizen and you did not spend the whole year outside the country in a home that is available to you outside the country, you'll be resident. Then on the basis of that, your foreign income and your local income will be subject to tax.
Look of you.
So I would say that in this case, you have to file your returns on the foreign income and pay the appropriate tax. However, that will amount to some double taxation, because the foreign country will tax it and the local government of Ghana will also tax it. You have the right, which is entitled to you, to apply for what we call double taxation relief. So there are 3 double taxation relief that are provided in the law. So we have what we call tax credit. Tax credit, which means that when you pay the tax in a foreign state, and then Ghana government or Ghana Revenue Authority also taxes you. On the basis of that, the tax you paid in a foreign country can be used as a credit. That means that it will be like a tax you paid in advance. So you can use that one to reduce the tax that will be paid in Ghana. However, the amount of the tax will be used to reduce the local income tax liability should not be more than the tax rate in Ghana. So, for example, if you pay tax in UK and the total tax rate is about maybe 20%.
Or 40%.
40%. Yeah. And then Ghana tax rate is up to 35%. The maximum tax credit you can claim is up to 35%.
So the remaining 5%, what happens to it?
Yeah, you bear that cost.
Yeah, I say more.
But the question is that if you have to give you everything, how do we treat it? Will Ghana government refund the balance to you? That is another issue. So government cannot, give its resources because you decide to go and earn income from somewhere. So at least in order to relieve you, let's come and pay, come and get a credit on the up to the Ghanaian tax rate. We call it average Ghanaian tax rate.
Right.
Yes.
It's interesting because I don't think a lot of people know that. You know, it's like when you travel abroad, you spend in the shops. At the airport, you're allowed to bring all those tax receipts and get a certain kind of refund on tax. It's the same principle you're
The same principle which is applicable here.
So if you're earning dollars abroad by working online, we're saying declare it here. But when you have paid tax here and paid tax there, bring the receipts of the tax you paid abroad, and it serves as a rebate, for your tax process here in
Ghana.
Ghana.
Apply, send it to Ghana Revenue Authority, and then they will give it to you. Because the law obliges them to the extent that once we can authenticate that this is a true receipt, and they can also verify that ends it, they will give it to you.
So sometimes the values may be close enough to the extent that you may not pay too much in Ghana.
No, it depends on the average Ghanaian tax rate and the date and the time that you have incurred the cost.
Right.
No, it will be in a foreign currency. That have to be exchanged in Ghanaian cedi.
Okay, phone lines are still open. We're learning about tax for you as an individual, tax for you as a business. Numbers to call 0302-216-541. You can also keep sending us your comments on 055-1111-997. I have a few questions of my own. Are foreign remittances subject to tax? I'm here. I have an uncle, sweet uncle, in the US. And he sends me some $3,000 every month. I will take it in cedi because they won't give me the dollar. But is that remittance subject to tax?
Okay. You know, one interesting thing about tax is that to the extent that the income is connected to you,
any which way
it is, unless it is specifically exempted under the law, you will end up have to go and
so
pay.
Long as it's money.
Yeah, so that will be a gift tax for you, so a gift income, and so in that case you have to file the returns or just pay the correct tax, and that ends it.
Okay. You explained something about tax in double taxation.
Okay.
But I'll still ask this question because it may be slightly different. My question is that for dual citizens, are they susceptible to tax in both countries? So it's not a one-off thing that you've done a consultancy and you are expecting some money, but this is a continuous thing. So you're a dual citizen of Ghana and of Canada, and you do business in both places. Are your incomes susceptible to tax in both countries?
Okay. You see, the interesting thing is...
Okay, that was my question. You can hold on to that. I've got one on social media. This one is from Harry Achu Apetogbo on Facebook. He says, what are the various means by which GRA tax incomes earned abroad by citizens? Harry, I'm not getting your question clearly. Okay, what are the various means by which the GRA taxes incomes earned abroad by citizens or residents? We can hold on to that one. I've got a caller on the line. Let me take that one as well. Good afternoon. You're welcome to Masterclass. Your name and where you're calling from.
Good afternoon, boss. I hope you're doing well.
I'm well, thank you. And you?
This is I'm also very well by the grace of God.
Brilliant.
This is Adjuan Joseph from tonight, man.
Adjuan, talk to me.
Forgive me, I didn't listen from the beginning, but I have to ask this question. Is it important that when you are with a company, you reduce the amount of tax you should pay for government and adjust it to add up to your employees' salary so that they'll be happy to work better for you? Is it okay on that direction?
We will answer that question. Please keep listening. He's asking whether you can reverse compute the value of anticipated tax and add it to your employee's salary. So, for example, if I want to pay somebody 2,000 cedis, I want him to take 2,000 cedis home. So if the value of tax becomes 450 Ghana cedis, I want to add that to his money, so he ends up taking 2,000 home. He says that, is it legal? Is it right to do that?
Okay. Now, you see, if you look at taxation is based on what we call taxable income. So once the income is taxable, then it's supposed to be subject to tax. Now, there are instances where when employees enter into agreement with the employer, they say that, and I'm just interested in my net salary.
My take home.
My take home. So the employers have the obligation to gross it up and then determine the relevant component that will include a tax, and then they remain the remaining balance.
So it's possible to do that?
Yes, it's possible.
Okay, Ajiman, that's your answer, right? I have another caller on the line. Good afternoon. You're welcome to Masterclass. Your name and where you're calling from?
My name is Chidiak.
Oh, my brother, how are you? It's been a while.
Yes, long time, yeah?
Indeed. Talk to me, my brother.
I want to know, if you transfer money from your account at the bank onto your Momo wallet and withdraw it, they tax the both monies in and out. Is it acceptable?
Chidiak, please keep listening. We will answer that question for you. He's referring to monies transferred from his account to his wallet, and then from his wallet to a certain payment. And he's saying that on both lines of transactions, he sees a tax deduction. What's going on there?
Okay, I think he's talking about electronic transaction levy,
right.
The e-levy.
Right.
You know, when you transfer money from your mobile money account, and then the law requires that 1.5% of the income, the tax, 1.5% of the tax of the income have to be subject to tax. So I believe that is what he's talking about. But I think if you have a TIN and you register all your account and you transfer from one Momo number to another, the tax will not apply, so long as the system can identify that it is the same taxpayer.
But this is from account to a wallet, then it will apply.
No, if it's from account to a wallet, once it is registered as a TIN, the same TIN number, unless the system cannot identify and recognize it, then the tax will apply. However, if you're transferring it from one person to another, that one the law sees the transaction
as two different beneficiaries.
Yeah. So on that basis, the income will be subject to tax.
Chidiak, we've attempted to answer your question. I have a feeling you are not satisfied. So please reach back to us again next week. We will pick it up and we'll probably start the show with it. Okay. I have a last caller on the line. Good afternoon. You're welcome to Masterclass. Your name and where you're calling from?
My name is Tim. Hello?
Yes. Please go ahead and talk to me.
My name is Tim.
Hello, Tinkrang. I'm struggling to hear you. If you can just reposition yourself and speak to me.
Yeah, my name is Tim from Medina.
Right. Tinkrang, talk to me. I can hear you now.
I want to find out what is the same as the automatic exchange of tax. And secondly, where the act of the 890 in our Ghanaian laws depicts that such an act is worldwide is happening. And three, if I'm a non-resident, and you are saying that by 3 months staying here, I'm a resident, how do you justify that when I pay taxes over there and pay taxes over here? I mean, how do you juxtapose it? I don't know whether...
Okay, please keep listening. We'll try and answer that question. Yes.
Okay, that's a very interesting one. I know. Yes, we have a separate law, which is Exchange of Information Act, which Ghana government will normally, Ghana Revenue Authority is mandated to apply to exchange information between countries. So let's say Ghana can exchange information with South Africa. South Africa too can exchange information with Ghana. And these are global issues which are going on in order to assist each country to tax, to collect and tax income. Now, so there's a specific law. So when you read section 134 of the Income Tax Act, it makes provision that the Commissioner General can even go to, amended the Banking Act. That allows the Commissioner General to pick banking information without your knowledge, and that can be exchanged with another country. So there is legal provision for that. So on that basis, now the other aspect is he's been taxed outside the country.
I think you explained that.
I have explained that one earlier.
Yes.
Now, so you can claim for double taxation relief, which
Yes.
is provided in the law.
Okay.
Yes.
All right, Tinkrang. So there you go. I've got a last one on social media. This one is from Vodi Logistics in Niboy Town. It says, "Hi, good afternoon, Masterclass. I want your resource person to help throw some light on the differences between tax avoidance, tax evasion, and double taxation."
Okay. that is a whole lot on its own.
This tax matter is a hot matter for people. Oh.
It's a whole lot of on its own. Yes, I think maybe.
Let's try and do it in 30 seconds.
Okay, good. When we say tax avoidance, it's basically a way of trying to minimize or reduce your tax payment. It's the same as tax evasion, but the only thing is that tax evasion is a criminal issue. Tax avoidance, we say that okay, there's some loopholes created in the law, so we want to take advantage of that to advantage. So, but when you're caught, I mean, you'll be subject to what we call civil prosecutions, and in this case, GRA will take you.
So tax evasion, you have earned the money, you don't pay the tax.
You don't pay the tax.
Tax avoidance, you take a business decision that prevents you from paying the tax.
Exactly.
Okay, and double taxation.
Double taxation. This is why two countries will want to tax the same income.
Okay, I had one last comment. I think this was from John or? Okay, this one is from Kwashie in Kaswa. Kwashie says, kindly throw some light on tax on estates in Ghana. Is it real estate, Kwashie? I'm going to assume it's real estate.
Yeah, I think you have that topic coming up in 3 weeks' time.
We have that topic coming up in 3 weeks' time. So, Kwashie, please keep your dialogue here for the next 2 weeks. I've got John from Ridge. John says, I have realized a lot of multinationals are now doing retailing in Ghana. I bought a roll of shawarma at a multinational shop at Osu without a receipt. I was just told by the Ghanaian workers that this is outside of the facility. Please, is this right? I think I know the place where the shower.
No, you have to. I
beg GRA, I don't know. I beg GRA, I don't know.
Now, it's the law may require that. I mean, provision that every taxpayer must keep its proper records.
Right.
Section 27 of the Revenue Administration Act make provision for that. So if you're making sales and you're not recording it, then it means it's a form of tax evasion. In fact, you're actually evading the tax law. So on that basis, it comes with penalty. So the law make provision that if you do not record your transactions very well, that will be penalty you pay.
So let me give an answer to that question. From the information you have provided, it would appear that on the face of the document, some kind of tax avoidance is going on. But evasion. But it will require further investigation. Let me put that disclaimer out there. I know we have a lot of questions and the phone lines are still ringing. We would love to answer all of them, but that's all time will allow us. This has been Masterclass here on your Superstation. What's our takeout for today and what's our expectation for next week?
Okay, so our takeout for today.
If we remember nothing at all, what should we remember? One thing we should remember from today's conversation.
I think if you're a resident in Ghana, your foreign income will be taxed in Ghana.
If you're a resident in Ghana, your foreign income will be taxed in Ghana. We've had Fred Kwashie Awuttey, Esquire, helping us here in the studio understand taxation of foreign income. God willing, next week we continue our conversation with some more information on tax. We'll be looking at what trusts, partnerships.
We'll be looking at double taxation.
Double taxation is what we're looking at next week. Thank you so much for joining us. We'll see you same time next week.